Hey guys, what's going on? Thanks for joining. Today's going to be a pretty fun time. We'll go through a bunch of coins and an extended, I guess, love-hate segment. I think I got like 15, 20 coins people requested. So it's going to be awesome. We're going to go through them. We're going to look at what the model likes, what the model doesn't like, and why. Remember, this is like a 7-day type holding period. Really optimal for a little bit shorter than that, like about a day or two. But you can hold up to 7 days. And just to reiterate that, model performance has been back tested quite a few years and it's been excellent. So, but also you have to think about the model as not just like a signal on one particular coin, but rather it's identifying a group of coins that should outperform all coins or a group of coins that should underperform all the coins. So anything could happen with any particular coin. So just let you guys know that. We can kind of jump right in. But first, I want to say a few things. It was pretty wild what happened, out in Florida today. Another mass shooting in the U.S. At actually a gamer conference. So that's pretty sad. Hopefully the senseless violence, ends soon, especially when people just want to have a good time. Then also, rest in peace, John McCain. I'm actually a fairly hardcore, if you want to call it that, libertarian. So John McCain's not really my cup of tea. But you have to respect a man that was a POW for so long, and more importantly, not just a POW, but one that allowed his friends to go home so he can be, so he stay a POW even longer and take some more abuse and torture. So certainly a man of good integrity. So rest in peace, John. And we can kind of jump right into the model here. So. And this is really my first true live stream. So if anyone wants to chat, I think I got the chat box up. If I don't see it, then I'm doing something wrong. But, thanks for joining. Let me pull this up, the model real fast, and we can kind of jump right in. All right, guys, hopefully you can see the model here. So this is the results that I just ran about an hour ago. Not a ton changed. You still have the Sky coin up top and some of the similar names. Tezos is up there too, and Revane and Nexus, etc. But we'll actually jump into quite a few of these names in the love-hate segment, so we don't necessarily need to stay right here too long. I posted this on Google Docs, so you can kind of browse through it and see what coins the model likes and dislikes. In terms of performance, just kind of quickly highlight this. This has been, and I post this every day, so kind of full transparency. The model's still doing pretty good in August. Well, if you want to call it good, it's down 25%, but it's certainly better than the 33% that's kind of the universe is down, and certainly better than the 36.5%. The worst coins are down, so it's outperforming. Remember, this is a long-only portfolio. So kind of jump right into the coins that people wanted to talk about, and I'll throw over to what I consider the love-hate segment here. And here, just quickly, if you watched the video I made yesterday, kind of walk through some of the factors I'm looking at, but really this model has 16 different characteristics that actually lead to or help predict future performance. And of these 16 characteristics, at least for viewing here, I kind of combine them into 6 or so. One is short-term reversals, one is momentum, one is valuation, one is what I consider being alive, or really it's like a market cap, or if you've been around for years, you better have good volume and good market cap. Another is the risk of the coin. So less volatile coins actually do better. And another is liquidity, or low volume. So less volume you have is actually a good sign. And then these factor scores here basically tell you how strong the signal is right now, how powerful it is in terms of predicting future performance. So reversals a 4, momentum is a 5, and the scores here go from -10 to 10. So I've kind of aligned them all to be positive, but right now you got a bunch of 4s and 5s except for the alive factor, which is basically doesn't really matter right now. So kind of the big caps aren't necessarily outperforming the small caps. Just got to jump into some coins that people might want to see. I'm going to kind of expand my screen. It might help out. So here, talking about some of the names that the model loves. So most of these were requested in some way, shape, or form. So I'm kind of throwing them all up there. So the model likes Nexus. So why does it like Nexus? Well, kind of looking at here, you can see the short-term reversals. This is the exposure to that factor. So Nexus basically has a neutral or very mild negative tilt to reversal. So what does that mean in practice? Well, reversal is coins that have done really well or really poorly recently. So if it has a tremendous return yesterday or a couple days ago, reversal is going to be negative. If it's underperformed over the past couple days, reversal will be positive. So generally, coins that do well in the recent past underperform in the near future. And momentum is, you're talking like 1 to 2 week type returns, where Nexus has underperformed a little bit. And so far, it's nothing really too special. But when you get to things like less risk and low volume liquidity, this is where a coin like Nexus it shines here. So it has a lower volatility profile and has less volume, which has actually been predicting future returns recently. So that's why actually the model likes Nexus. And what's funny is I just thought about this. I actually haven't heard many of these coins pronounced in real life. So I have actually no idea if I'm saying half of these things right. So as usual, I'll be making a complete idiot out of myself. That's okay. Another coin that the model likes is Neblio. Hopefully I'm saying that right. And here, again, momentum reversal, basically flat. It's doing what basically the average coin is. And just to be clear, when I say a coin is red or green in any of these, it doesn't mean it was up in terms of USD terms or even in terms of Bitcoin terms. It means it outperformed or underperformed the average coin. So that's a slight distinction. But Neblio here has some green value, which means it's actually been beaten down quite a bit over the past few months, a bit more than the average coin. Those type of coins generally bounce back pretty hard. And then here, it also has a lesser liquidity profile, which actually helps them out too. Then there's actually quite a few requests for privacy type coins. So I got a PIVX, which I have no idea how to say that in real life. So we'll just go with that. Here, this is a coin that's really not really shining anywhere or not shining anywhere. And one thing you'll notice in terms of quantitative models, as long as you don't stink at a couple things, you might actually be in favor. And this is a good example where reversal is basically flat, momentum is basically flat, values basically flat, all maybe slightly positive. And then it has a little bit lower volume profile. So kind of put all that together, it's kind of a jack of all trades here, which gives it a favorable outlook over the next week. About some coins that the model hates. Again, these are requested coins. You got Republic Protocol, Icon, and Wanchain. I can actually start with Icon. It's probably my favorite coin out there in terms of fundamentals. But right now, the model hates it. And it's pretty clear why it would hate it. And it's because it's outperformed tremendously, really, over the past day or two. You can see here the reversal effect here is deeply red. So generally coins that outperform by a tremendous amount generally do not over the next day or two. So I'd be very cautious kind of FOMOing into Icon at this point in time. Although it's a great coin, and no problem somebody buying it for a long term or even being patient on it. However, what's very interesting is the momentum effect is very green for Icon too. So sometimes these things counteract each other. But in this case, the model is saying that the reversal effect is actually stronger than the momentum effect. And that's one of the pure benefits of quantitative analysis over something like technical analysis, even fundamental analysis. It's able to take millions of data points across days, years, months, and actually come up with some sort of final number, putting it all together. Because oftentimes when you do TA or FA, you might have some things that look positive, some things that look negative, and how do you actually come up, with the conclusion? In terms of Icon, also what actually hurts them is its volatility. It's a very volatile coin. Generally, that underperforms, and a lot of these factors, guys, it's not just something I found in crypto land. exists in crypto. Now we have the data, we can do the research, but I've done this for stocks, and there's been tons and tons of research out there from academics to practitioners to investment managers that show that things like lower volatility stocks outperform. Stocks with momentum outperform. There's a near-term reversal effect in stocks. There's a liquidity effect in stocks. So all these things exist in stocks and other asset classes. So it's not really surprising to me. It shouldn't be surprising to anybody really that these same factors outperform in crypto. So just kind of letting you know, I didn't kind of make these things up out of thin air. Very well tested, very well proven. But that's why Icon is not liked. It's basically the outperformance recently might lead to underperformance. It's a very volatile coin. I'll get to Republic Protocol in a sec, but if you want to look at WAN right underneath it, it's actually a mirror image of Icon. So let's kind of look at that quickly, glancing at it. That's why it's not liked. In terms of Republic Protocol, a similar story here, where the reversal is very negative. Momentum, it actually hasn't done that well over the past couple of weeks. Now with momentum, just to be clear, the way momentum is done in stocks and other asset classes, and the way I do it here is we actually take out the reversal. So for example, classically for stocks, 12 months minus 1 month is what's considered momentum. And the 1 month would be considered reversal. So you're really looking at that 11 months. So this momentum factor here is basically the 1 week return, 2 week return, excluding the near term, the past couple of days. But Republic actually has been beaten down a little bit more in terms of valuation, slightly above average. That actually helps it out. But in terms of the near-term performance and the momentum, it's very negative. It's also a riskier coin too. Not as much as Icon or Wanchain, but more so than the average coin. Yeah, it's less liquid, so that helps. But there's way too many things negative here, for the next day or week, and that's why the model's not liking it. So that's generally what I'll do in terms of what I call love-hate. Kind of go over a few coins the model loves, a few coins the model hates, and why. Remember, this doesn't mean these coins stink, doesn't mean that these coins are great. It's just that they have characteristics right now that generally exhibit outperformance or underperformance over the next day or week or so. But I also got a nice little section here I've named others. So these coins aren't necessarily the model likes or dislikes. It may, or they just might be smack dab in the middle. But these are coins that people were asking about, and I'm happy to go through them kind of one by one. So the first one is ETC. Now this is very interesting. So what I would say with quantitative models like this is it knows a hell of a lot more than we do. It's able to take in millions and millions of data points. I have a million plus lines of code. I mean, once you factor in loops and things like that, that kind of runs this model. However, the quant model doesn't know everything. So there's certain things that humans that we know that's going on that the quant model just can't pick up. The quant model is picking up data. I think ETC might kind of fit in here with Coinbase, although that's kind of being kind of played out in real time. But just keep that in mind that there could be things going on in real life that the quant model might not be picking up. So if you know something and you believe your FA is good or your hunch is good, it's certainly a pretty fine reason to override a quantitative model. What about ETC? In terms of performance recently, it's whether it's reversals, momentum, basically flat. In terms of valuation, it's actually not down very much over the past handful of months. It's actually one of the better coins out there in terms of value. But in terms of risk is also very good. It's pretty low vol here, so that's a pretty safe coin, and it's also very liquid, which is actually not a good thing in terms of outperformance. So there's actually a lot of decent things here, but the reality is the fact that it's actually closer to its highs, relatively speaking, even though everything's really beaten down in crypto compared to most coins, and its near-term performance isn't anything to be thrilled about. It kind of leads it to basically 82nd percentile, which is not a coin I'd necessarily buy, not a coin I'd necessarily hold, but it's not like crazy urgent, I'd quit what I'm doing and go sell it type thing, but pretty darn close actually. Next coin here is Tezos, Who knows if I'm saying that right? Again, I've never heard half these things spoken out loud. This is actually one of the top coins in the model. Actually, I think it's number 2 in the model. So why? Here, so kind of go left to right here in terms of performance. Basically nothing awesome. Basically flat. In terms of valuation, by flat I mean about average compared to all coins, not flat to USD or flat to BTC. In terms of valuation, it's been beaten down a little bit more, so it has some more room to run. It's also less volatile and has a bit less liquidity. So, overall, it's pretty positive characteristics here. It's actually not a bad, coin to buy at this point in time. The ZIL is up next. The percentile here is about 75th percentile. So you're kind of getting into the danger zone. I'd say in terms of performance here, it's done pretty decent over the past couple of days, which again, compared to the average coin, so that's a negative, but its momentum is slightly above average. But what's hurting them here again is it's a pretty risky coin, and risky coins generally don't do too well. And I'd like to mention something too, guys, that on this page here, I kind of really distilled the data and simplified it a bit to put it on scales so you guys can see it a bit easier. The reality is the data isn't so cut and dry. The more extreme data is certainly more powerful than the data kind of in the yellow, the orange, and the light greens. So if you're on the tails, so the dark green or the dark red on these spectrums, you can almost add like a factor, right, an extra power factor there. Digibyte, I got quite a few requests on that guy. So I should have put my header down there, but I know which one's going left to right, so we can kind of do that here real fast. So Digibyte, again, hasn't really done much compared to the average coin, whether you're looking at the past couple of days, the past couple of weeks, but its value, whoever has been kind of paying attention to it over the past few months, it's actually been doing pretty well. So it kind of has less room to bounce back compared to the average coin. In terms of risk, it's basically flat, and it's still a fairly illiquid. It's a pretty liquid coin. So overall, it's actually I'd say getting in the urgent. I probably wouldn't buy it at this point. I probably wouldn't even hold it at this point. I'd kind of give it a week or two to see what's going on. That is, if I'm following this model, which again has a pretty strong performance going back. Had a lot of requests again for privacy coins. So here we got Dash in terms of near term and kind of momentum type performance, basically flat. Valuation here is a little below average, so it hasn't fallen as much as other coins. And then you have things like lower risk here, which is good, which you can think a lot of bigger caps are generally going to have lower risk than kind of lower cap illiquid names. And then the very far right, we have liquidity here, which Dash is extremely liquid. So that's actually not a good sign for future performance right now. Pundi is actually doing really well. It's actually it was one of the top coins actually yesterday. So this is how the model, even though it's a 7-day holding period, things can change pretty quick. I think it was a top 5 coin yesterday, and it did pretty well. Then it bounced down. Why did it bounce down? Probably due to this reversal effect, where it's kind of dinging the coin for doing pretty well yesterday. In terms of momentum over the past week or two, it's beaten average coin, which is pretty good. In terms of valuation, it actually has plenty of room to run, which is pretty good. It is a risky coin, and it's basically average in terms of liquidity. So you put all that together, it's about average. So what does that mean for me? If I held it right now, would I necessarily sell it? Maybe, maybe not. Just depends if I got something better. But certainly not an urgent sell, and certainly wouldn't be buying it if I didn't own it at this point in time. What about Stellar? And one good thing about following this sort of quantitative, disciplined approach is you don't fall in love with a coin. Dealing with stocks, somebody told me early on, is you can love a stock all you want, but it's never going to love you back. And the same exact thing with these coins. They're never going to love you back, so don't fall in love with them. Obviously, you can treat them as investments, long-term investments, short-term investments, trading vehicles, whatever, it doesn't matter, but just don't fall in love with it. Stellar, here, is a good case of there's other things going on. So you kind of hold quantitative analysis with a grain of salt. You kind of have to put everything together. But what about Stellar overall? In terms of performance, it's done a little bit worse than the average coin recently over the past few days. In terms of momentum, it's done a little bit worse as well over the past couple of weeks. In terms of valuation, it's done really well compared to most coins over the past few months. Again, if you've been following it with the Coinbase and a bunch of other news with the IBM and the like, it's done fairly well. Really strong fundamental coin. In terms of risk, it's actually really strong. So for a coin that's not what I would consider a true currency, it's actually a lot less risky than you would imagine. So it's in the green territory there. In terms of liquidity, it's a bit higher liquid, which again isn't a good thing. Kind of put it all together, it's a slightly above average. This is a coin where, given its low risk profile, I've had a couple bad days in a row, then it's going to start creeping up in the model. That's a good time to buy. Right now, being 42nd, could I buy it? I'd be okay buying it, but generally I'd have better coins. Like, for example, I actually bought Nexus today. It's kind of in the love section. So, I'm trying to buy kind of the top 10% because those generally have the highest chance of outperforming. What about Dig? Got a couple of those. Just FYI, guys, I know I'm not going to be able to hit every requested coin, but some of them that you guys requested, I just can't do because it either didn't have enough data or just wasn't around long enough. VeChain is one. That's a prime example. Love the coin, but just the data due to the token swap and the dividing by 100 in terms of price, the data is not clean, so I can't use it. If somebody wants to say something in the chat, do it, because I don't know if it's working or not. But if not, no big deal. Certainly appreciate it. But about Dig, so the average return right here recently over the past few days, basically average in terms of crypto. So nothing great, nothing bad in terms of what it's done recently. So no real reversal effect. In terms of momentum, it's actually negative, below average here. So it has not done as well as average coin over the past week or two. And generally, those coins that do well keep on doing well. In terms of valuation here, it's actually not that beaten down compared to the average coin, so it has less room to run. So you have a couple of dings on it. And then in terms of risk here, it's actually less risky. So the risk here actually really helps it out, but this is where it's very important. See, liquidity is also good here too, but this is where the quant model shines too. It's able to take positives from being less risky and less liquid, and negatives from valuation and momentum, and say, okay, put all that together in a pot, and what does that mean? And it's basically saying, okay, you're slightly below average here. Again, that doesn't mean I'd urgently sell it, but I wouldn't buy it, maybe hold it, but potentially sell if I could find something better. SingularityNET is the next one. Got a request for that guy. Here, again, about average performance for the past couple of days. Momentum, very similar to Dig here. Slightly below average to below average over the past 2 weeks. But its value here is it's above average, so it has more room to catch up. And you've seen that recently with coins like Nano or even Icon. If you looked at this model, call it 2 weeks ago, 3 weeks ago, Icon and Nano would have tremendous value. They were just beaten the hell up. So those coins generally can catch up pretty quick. So you want to see that sort of valuation. What else about SingularityNET here? Its risk is about average, a little bit less liquid. So again, this is another benefit of the quant model. It's able to put together the fact that it's less liquid with a little more valuation combined with a little bit negative momentum. What does all that mean? It's actually 21st percentile here. Once you put it all together, that's a coin I'd actually begin to look at buying. I would still prefer to buy top 10, whether it's like the Nexus I mentioned I bought before. But I'd have no qualms about buying something 21st percentile here. And I certainly would keep holding it if I was holding it. No need to, I wouldn't think about selling it at this point in time. What about ARK? Here, ARK's actually done pretty well recently, so that might be prime for a reversal. So just kind of be careful there. In terms of momentum, it's been pretty good over the past couple of weeks. So those that reversal momentum effect are kind of counteracting each other here. So kind of the holy grail would be a coin that has done awesome the past 2 weeks, but has done pretty poor the past couple of days. That would be the perfect storm, and a coin you should want to eat up pretty good. In terms of valuation, ARK is about flat. It's about flat in terms of risk, and it's a little bit less liquid. So you put all that together, it's actually saying the momentum effect is stronger than the reversal effect here, and combine that with less liquidity, and it comes up to be about the 20th percentile. So that's, again, a coin I would be certainly okay buying. Definitely would hold, no problems whatsoever. I wouldn't be selling it. Komodo here, another requested coin. You're talking slightly above average performance. That's why it's in the orange in terms of reversal effect. Momentum is slightly negative here. So this is kind of the double whammy here, where I just talked about the holy grail of performance. This is saying the coin's actually underperformed over the past couple of weeks, but it did pretty decent over the past couple of days. That's actually what you don't want to see. However, here it actually combines that with a little bit less risk and a pretty solid liquidity profile here. So it's actually not as bad as it seems on the first blush, about 35th percentile. I kind of dipping in the sand where I probably wouldn't buy it if I didn't own it, but I would probably still hold it if I did. But what about Vertcoin here? So again, everything I'm saying is what I would do. Obviously, do your own research, and I'm not advising you. Everyone's portfolio is a little bit different. I'm following this model pretty closely with Monero Investments, but I'm sure none of you are. So if that's the case, you have your own risk tolerance, your own other holdings, etc. So just kind of keep all that in mind. I'm just kind of giving you what I would do if I was in the position of potentially buying, selling, or holding any of these coins. Vertcoin, it's actually underperformed recently, so it's slightly above average in terms of reversal. In terms of momentum, slightly below average. So again, those effects are kind of counteracting each other a little bit. In terms of valuation, it's not as beaten down, but it's not one of those like Stellar that's done pretty darn well, or ETC. So it has a little room to run, but not nearly as much as the average coin. In terms of risk, it's actually a lower risk coin, and it has a good liquidity profile. So Vert is actually in the top 10. So certainly a coin, I don't own it, full disclosure, but it's certainly a coin, be perfectly content buying it. If I had capital, if I was selling something, the model would be telling me it's a great coin to buy at this point in time, due to the fact it's lower risk, a little bit less liquid, and you kind of counteract some of the momentum with a slight potential for a pop over the next couple of days. About Matrix AI Network, again, the past couple of days, basically like the average coin, nothing to really think about, but over the past couple of weeks, it's underperformed. So keep that in mind, that those coins generally continue to underperform. In terms of risk, it's basically flat. In terms of valuation, it's basically flat. In terms of liquidity, it's a bit more liquid than the average coin. Kind of put it all together, it's below average in terms of the cryptoverse, what I like to call. So that's about 200 coins I rate every day. So here is a coin I probably wouldn't buy at this point. May or may not hold. Just depends if really if I got time in some cases, and if I got something better to buy. At the 65th percentile, not an urgent sell, but not a coin I'd be particularly confident holding over the next day or week. What about Monero? So here again, a lot of privacy coins. It was actually pretty high up in my ratings for a while. It just kind of dipped down a bit to the 40th percentile. So where does it stand now? It's actually outperformed moderately over the past couple of days. Past couple of weeks, it's about flat. It hasn't really been beaten down. It's kind of held its value over the past few months, again, compared to the average coin. So, if the average coin is down 30%, 30% loss would be the yellow. So everything is compared to the average coin. In terms of risk, it's not really risky at all. It's kind of day in, day out volatility is pretty low, which really helps the coin. And actually, in terms of liquidity, it's actually fairly liquid, although it's kind of interesting. It's actually not as liquid as most people think. That's actually a little bit trickier. And a lot of privacy coins are that way too. What about Substratum? It's the last coin I got a request for that I was actually able to do some analysis for. I might actually check some DMs because I might have got a couple more. But about Sub here, so it's done fantastic over the past couple of days. That's usually a sign that it's going to underperform over the next couple. In terms of momentum, it's done great over the past 2 weeks. So here is a coin that's just the danger is here is the performance is front loaded, and those generally have a reversal. So it's kind of counteracting each other. This is one of those, yeah, with the couple of weeks of great performance, but maybe I wouldn't necessarily dive right in and FOMO right now. Kind of let it cool off a little bit, then jump in. If I was just looking at performance, in terms of valuation, it's actually pretty below average here. So it's held its ground a bit better than other coins. In terms of risk, it's a very risky coin. Not the most risky, but getting there. As you can see, it's kind of in the red territory. And in terms of liquidity, it's a bit more liquid than the average coin. You actually put this together, with the risk, the less, the more liquidity, the less value, and the reversal problem, it's actually in the bottom 10 percentile. So a coin like this, generally, I wouldn't own. I would actually be pretty urgently selling it if I owned it right now. It's tricky because, the reversal effect sometimes that keeps going. But the whole point of a quantitative disciplined approach is you're playing the odds, and you're playing kind of the aggregate portfolio, and you're kind of playing day in, day out. So, even though you might, sell something that continues to run, or you might, buy something that goes down, that's perfectly acceptable in terms of quantitative disciplined approach, because you're taking enough kind of cracks at it that eventually you outperform. And that's exactly what the performance here of this model has done. So guys, I certainly appreciate it. That's kind of the extended love-hate. I'll be happy to talk about any particular coin going forward, different videos. That's no problem whatsoever. Thanks for joining, and hope you all have a great week. Take care. Bye.